Today is Monday, October 14th, and this is the ADM Investor Services Weekly Market Kickoff. Today's guests are Alan Bush, Senior Financial Economist here at ADMIS, and Steve Freed, Vice President of Grain Research. Alan, what is the outlook for the U.S. dollar?
Well, the dollar index came under a little pressure late last week as some of the flight to quality longs were liquidated on optimism concerning a U.S.-China trade deal. So that seems to have faded a little bit. Chinese negotiators say they need more talks before they sign the Phase 1. So the dollar has rebounded. Also, it looks like interest rate differential expectations remain bullish on balance for the dollar index. So the main trend for the dollar is still higher.
And what is the outlook for U.S. stock index futures in light of today's news that China wants more talks before signing a Phase 1 trade deal with the U.S.?
Well, first of all, that would be a bit of a negative piece of news for the stock index futures, and of course it was. But since then, stock index futures have now recovered and are actually trading just steady on the day. So with the stock indices performing that well, that in itself is a sign of short-term strength. Also, as interest rates tend to work lower globally, that also is supportive. So nothing has changed in the long-term outlook for the stock index futures. Still looks higher, and I believe interest rates will be supportive.
Steve, the big news in the grains was a possible trade deal between U.S. and China. What is the latest with the deal?
I think initially over the weekend, as Alan said, the market was trying to get more detail and clarity in the trade negotiations and the Phase 1. It seems like if they agree to buy something, it may not be until 2022, and that could be over a 2-year time frame. So the $40 to $60 million could be over that 2-year period. So I think we're waiting for just a shopping list of what they could buy during that time frame, and then signing the agreement possibly mid-November in Chile at the meeting, and then see how quickly they come in and buy. We are watching to see if the two countries drop any tariffs. That would kind of help the trade situation. But really the only thing that came out of the agreement was they are not going, U.S. is not going to increase tariffs 5% on October 15 on $250 billion of Chinese goods.
And what is the latest USDA, U.S. and world corn, bean, and wheat supply and demand?
Well, the USDA came out and they surprised the market by keeping the corn U.S. crop unchanged and not lowering the corn carryout as much as hoped. And then for beans, they did lower the carryout, and for wheat, it's unchanged. So it was kind of a neutral to bearish report, but the trade news rallied the market to regain the losses that we had on the USDA report day. So now what we're doing is we're watching harvest results and export demand, and to see how these change the S&Ds down the road.
A winter storm hit the U.S. Northwest growing areas. Did it hurt crops there?
Right now the guess is that maybe as much as 100 to 160 million bushels of corn and 40 to 60 million bushels of beans may have been lost because of this storm, whether it was due to the snow, the wet weather, or the winds, or the cold temperatures.
And what is the U.S. forecast?
Right now it's improving, and we're looking at 2 weeks of drier and warmer weather. So we may be able to get into the fields for harvest and get a little bit better handle on, number one, what the yields are, and number two, if the farmer's willing to sell at these prices.
And how are South American crops?
Right now they're okay. Brazil is off to a slow start in planting because it's been dry, but it looks like they're going to get rains this week. Argentina situation, they have been getting rains. It's going to turn a little drier. Their monsoon really doesn't start until November 1st. So right now the weather is pretty close to normal.
And what are the funds doing in grains?
The funds covered some of their shorts last week and added to their soybean longs going into the report. Right now they continue to be small net buyers. The one interesting thing is that over in the soybeans, the index funds have come back in and bought some beans. So these are long-term players that are positioning themselves out of their portfolio, and maybe it's because of the trade deal, but you know, we're looking at pretty strong resistance in the marketplace at $9.50 in the beans, $4 in corn, $5 in wheat, and we really need some more positive news to push above those price levels, or we could make a little bit of a setback going into harvest.
And should farmers sell at the current prices?
I think they should. They've got grain in storage from 18. I think they have been slow sellers of the 19 crop that's in the ground, but especially given the carrying market, they should be looking at 2020 to start selling, because next year, assuming higher acres, even if we have a deal and normal weather, yields could increase, and that could increase the carryout and eventually lower prices.
Please remember that the opinions expressed here today are solely the opinions of our guests and are not necessarily the opinions of ADM Investor Services or Archer Daniels Midland Company. If you have questions or comments or would like to know more about our services, please contact us at www.admis.com.